All right, so in this video, I'm going to talk a little bit about why we care about monetary policy and the business cycle and how that relates to businesses. So, um, why do we care about monetary policy and the economic cycles that we go through? Well, so there are a variety of reasons why the economy can go through cycles. One of them, demographic changes. So one of the bigger demographic groups that we've had in the past 100 years or so has been the baby boomers. And so there was a big group that was born in a certain period of time, and as they kind of moved through the different stages of life, they tended to engage in different consumption patterns and things like that. So whether that was, they got married during a period and they started having kids, and they went to college at certain points in time, things like that, right? And so things like that can cause some cycles, because as they move through, they tend to engage in different types of commercial activity. Societal preferences can also cause different sort of cycles and things like that, in terms of whether the economy shifts more towards maybe healthier food options, or a lot more of the consumer's budget is now going towards electronic devices than used to be the case, perhaps because we have things like cell phones and things like that are on tablets, which are way more prevalent than they were in, say, around the year 2000 or something like that. 25 years ago, as of when I'm making this video, that was a very different scenario, right? So societal preferences can change some of these kind of behaviors, and that can lead to some cycles in terms of what's going on in industries and the economy as a whole and so forth. There are also technological changes that can lead to some major shifts. So historically, there's a big move from what was historically true for most of recorded history, which was most people were fundamentally agrarian in many ways, which means they depended on agriculture, and pretty much for a long time, you grew something, and then that was what you ate from the subsequent winter. And so it was difficult to kind of save food longer term. There were some preservation methods, but and so pretty much a huge portion of mankind was kind of fundamentally agrarian for millennia. But now, and then kind of moved into more industrial, and actually had more cities and people working on assembly lines, pardon me, and factories and things like that. And then we got more technology and kind of the IT sort of revolution, and we have more computers and networking and the internet and all the things that came with that, right? So, that led to some major changes. Even the invention of the automobile led to a very big change in kind of how people moved and lived. It used to be people stayed historically pretty close to where they were born. And then you throw in railroads and cars and things like that, and all of a sudden, people started moving a lot further than they used to, and driving and traveling much further distances. Um, Various external factors, wars, things like that. If you go back to like World War I, World War II, major effects demographically because of so many people that died. Major effects industrially because of all the industrial base that was destroyed and blown up basically in various places in Europe. And that definitely had some impacts on the economy. Human nature, manias and bubbles and things like that. So, the dot-com bubble, some of the other historical bubbles, whether it's the Mississippi scheme or South Sea bubble or what have you, things like that could have some significant economic effects. Fiscal policy. So fiscal policy is looking at what the government is doing. So whether that's taxation or spending. So whether they're spending on infrastructure or not, or what kind of infrastructure, things like that. That's going to have an impact on the economy as well. And monetary policy, what the Federal Reserve is doing in the at least as far as the United States is concerned. Are they increasing interest rates and therefore pulling money out of the system? Are they decreasing rates, kind of trying to put more money into the system? Are they trying to, in other words, are they trying to expand or contract the economy through what they're doing with interest rates and the money supply? And I'd argue that that's probably likely more important than fiscal policy, at least in the United States for the most part. There's maybe some caveats to that, but probably a little bit more important. And I'll probably talk about that a little bit more in a subsequent video. But basically, when the Federal Reserve makes changes to interest rates, it has an effect, it filters out through the whole economy, and it tends to do that just by virtue of basically supply and demand, and the fact that the Federal Reserve just made a change in terms of what's going on with the money supply. So these are all kind of things that kind of cause economic cycles. Now, if I'm looking at this from the perspective of a business, I can't change or eliminate the fact that there are going to be cycles and economic changes. But what I can think about is, how can I manage my firm if I'm representing a company and I'm an executive of a company? How can I manage my firm given what's going on in the economic environment, what I expect to be true in the economic environment? What can I do to make a difference? And maybe it means I diversify into different types of products or services that would respond differently to different economic scenarios. Maybe I stockpile more cash when the economy is looking a little bit shaky. Maybe I make some more aggressive investments when everything is falling apart and prices are a whole lot lower. And I think, this is the time to kind of, use the proverbial saying, strike while the iron is hot, right? So maybe I need to do something at that point. So I can try to respond to it and make wise choices. And that's why one of the reasons we care about this, right? We can't control what's going on in the economy as a company, but we can try to make wise choices in light of it. We can also look at this from an investment standpoint. How can I manage my investments given the economic environment? And that gets kind of interesting too, regarding whether you're more active or passive or things like that. But even still, it is important to recognize what's going on out there and to be aware of it so things don't come as a big shock or a big surprise to the extent possible. Hopefully, this kind of little discussion has given you some ideas about why we care, a little bit about sort of economic cycles, and it's starting to make you think a little bit about why we'd care about monetary policy and things like that a little bit as well. Thank you so much for watching and have a great day.